how to calculate capital reserves on your commercial property, okay? It's very crucial that you have your property savings account set up for when stuff happens on the property, because stuff always happens. So this is a very practical thing to do, and actually a requirement by our students when they close a deal with us. Okay? All right. So a capital reserves is this is my definition: cash on hand set aside to be used for future property expenses or to offset any losses. Here's what I mean by that, okay? Cash on hand set aside to be used for future property expenses. Let's say that you know, for example, that the roof is probably not in good shape, and in about 4 or 5 years you're going to replace it. So this capital reserves fund needs to be built up, so when you have to replace your roof, you have the money for it, okay? Or let's say your parking lot has a lot of potholes in it, and you know that next summer you're going to have to redo this parking lot right after winter. Need to save for it. This is what the capital reserves fund is for. Okay, so we have future property expenses or to offset any losses. Okay, these are short-term losses. Many of you know when COVID happened, things kind of shut down and they got kind of squirrely, kind of got scary for us. But guess what? All of us had reserves. So even if we had tenants that didn't pay, guess what happened? We had money set aside to pay the expenses, to pay the mortgage. That's how important it is to have capital reserves, and it's just a smart thing to do. Now, the question is, how much do you set aside? Well, that depends on many factors. I'm going to just share with you just 3 options, okay? Option number 1 is when you're calculating your capital reserves, they need to set aside before you take any cash flow, okay? Is 5% of your gross annual rental income you set aside for it. So you take no cash flow, and you put that money aside and you put it into a property savings account. Okay, so that money goes away, okay, and be set aside and built up further for roof replacement, things like that. But this is the initial thing you want to do. Here's the second option, is to save up to 3 to 6 months of operating expenses. Okay, so taxes, insurance, property management, utilities, all that stuff. You want to, if you can calculate that on a yearly basis and divide it by 2, right? You can have 6 months of operating expenses saved up. Again, just a smart thing to do so you can sleep well at night, just in case something happens, okay? And option number 3 is to save up 6 to 12 months of mortgage payments, okay? So have that set aside so that if another pandemic happens, you don't have to worry if things shut down. You have the money set up to the side to weather the storm, okay? So again, the reason why we have a capital reserves and you learn how to calculate it is because you need a rainy day fund, because stuff happens always on a commercial property. So you have to be prepared. All right, so there we go. That's how you calculate a capital reserves on a commercial property.